The hedge funds are once again shorting gold and silver. Again, historically, more often than not, when this structure develops on the Commitment of Traders report, it precedes a big move in the sector. Greetings, land of Arcadia economics. My name is Dave Kranzler, and my website is investmentresearchdynamics.com, and I publish the Mining Stock Journal and Short Seller Journals, and there's links to those on my website. So today, I wanted to discuss some factors, a couple new factors, in fact, that I believe should push the price of gold and silver higher over the course of the next few months. Now, obviously, we're in a period of seasonally strong demand coming from India, as well as pretty much most of the Eastern Hemisphere. But these are a couple of these are new factors. A couple of them are old, and I think they will help lead to higher prices for gold and silver. But first, this episode is sponsored, as always, by Silver Viper. You can find its stock under VIPRF on the OTC bulletin board and VIPR on the Toronto Venture Exchange. And Silver Viper is advancing its Law of Virginia project and silver project in Sonora, Mexico. So over the last 3 or 4 weeks, I've had emails from several subscribers asking me, because Silver Viper hasn't had a lot of news flow lately other than a financing a few months ago. And the stock's been pushed down quite a bit. It's down at 7 cents a share, 7 cents a share. I think it's bottomed here. But I contacted Steve Koch, the CEO, to find out if there were any news catalysts coming that might help move the stock higher, especially if the price of gold and silver take off. So, and they are in the process of planning a drill program. They're still finalizing their targets. One of the first thing they're going to drill is the El Ruby deposit zone, and they're going to look to expand the footprint and hopefully expand the mineralization and mineral content of the resource. And then after that, they're going to test a new target zone. It was a discovery made, I don't know, within the last 12 or 18 months, I believe. It's called El Molino, if you're interested. And so they're looking to expand just in general the mineralized footprint on the project property. So the catalysts that could move the stock, let's just say they don't have a definitive date. Steve said he wants to start as quickly as possible. But they're not going to start poking holes in the ground until they're confident about where they're putting the drill. But let's just say the drilling starts next month. Maybe it finishes in, I don't know, I'm just guesstimating December, so you start seeing drill results probably in February. I'm just guessing on that timeline. And then after that, they'll release an updated resource estimate. And so, I mean, if they have some good drill assays, or they even make some new discoveries with this drill program, I mean, it should put a booster engine, it should light the booster engine under the stock. And if we get a nice move in silver, I really think that this stock is one that could triple, quadruple over the next, I don't know, 9 to 12 months, let's say. So let's move on to the topic du jour, or I should say the bi-weekly topic. And the first factor, I'm sure most of you saw the reports that the government's treasury debt has gone over 33 trillion. And the treasury debt is in an irreversible upward debt spiral. And the debt is starting to it's on the cusp of going parabolic. And once once a system, an economic system, a country gets into this situation, this is the type of thing that leads to hyperinflation. And the annual interest payments on the treasury debt are soon going to be over $1 trillion on an annualized basis. And the reason why this should be very bullish for gold is it's going, you're going to, foreign buyers are going to soon abandon financing the treasury debt because they're going to lose confidence in the dollar. I mean, they already probably look at this country as being egregiously mismanaged. And that's going to push up the price of gold in terms of dollars, because eventually what's going to happen is the Fed's going to have to start financing a good portion of this. So that means they're going to be printing more money. And obviously that's going to be bullish for gold. I mean, I personally think that when you see this really go parabolic, and it's all, as this increases, it devalues the value of the dollar. And as it starts to go parabolic, I mean, we could end up going Weimar at some point. And I'm not saying that's going to happen in the next 12, 18 months, but it certainly could within the next 18 to 24 months. And so obviously that's extremely bullish for gold. And the second catalyst or second factor is, and I may have mentioned this on a previous episode, but Russia announced a few months back that, if you recall, they had halted their central bank gold buying, presumably because they were the revenues going into the country were getting hit from the restraints put on by the U.S. on the rest of the world buying Russian oil. Well, obviously they've been getting around that, especially now that the price of oil is going higher. They're probably getting flush with cash again, and so they announced a couple months ago that they're going to start buying gold again. And so that's one source of soaking up the supply of physical bars. The second catalyst, and the discussion about why the premiums for gold on the Shanghai Gold Exchange had like gone crazy to the upside, and the explanation was that China put import curbs on gold going into the country, and that was because the yuan had gotten weak, and what happens is they need to convert their yuan to dollars, and that creates, in order to settle the gold trade or the gold purchases, and what that does is it basically acts as a capital flight of yuans outside, and then outside the country, leaving the country, and then the entities that, presumably banks that exchanged yuan for dollars, they dumped the yuan, and that's why the yuan is getting pushed down. Well, the yuan stabilized. It started to move higher again, and as you can see here, this came out last week. The temporary curbs are lifted, and China's going to start re-importing a lot of gold. Now it'll drive down the premiums on the Shanghai Gold Exchange, but that'll just increase demand even more. So that's another bullish factor. The third, I guess, may call the fourth factor, and I think I mentioned this maybe in the last episode, but on the COMEX, per the weekly Commitment of Traders report, the banks are reducing their short exposure to gold and silver, and at the same time, the hedge funds are reducing their long side and increasing their short side. Now, so I like to look at the disaggregated COT report as opposed to the one that just shows commercials. I forget what the three categories are. Commercial, investment, and irrelevant, which would be retail, I guess. But anyway, I don't even care, because I look at the disaggregated report because it contains more detailed information for as much as we can trust this information. So this is the the COT report that was released Friday for the previous Tuesday. And you can see here, this is silver. The banks reduced the short side, sold a few long contracts, and they're net short a little less than 3,000 contracts. At one point, about a month ago, I think they were actually net long silver contracts, and I think as part of their price management arrangement with the Fed, I think they because silver started moving higher, I think they kind of went short again to try and push the price down. The managed money, which are primarily hedge funds and CTAs, and they, this is momentum trade based trading. They don't invest here because this isn't investing in gold and silver, because these accounts don't take delivery of their gold and silver for the most part. And if they do take delivery of their gold and silver, they leave it on the COMEX, and that doesn't do anything for the price of gold unless the gold and silver leave the COMEX and reduces the supply of gold in the vaults on the COMEX, and it makes it harder for the banks to cover their shorts and manage the price. So at any rate, the hedge funds are once again shorting gold and silver. You can see down here, they shorted quite a few gold contracts last week through Tuesday, and they are almost net short silver again. And again, historically, more often than not, when this structure develops on the Commitment of Traders report, it precedes a big move in the sector. Now, that doesn't mean the move's going to happen right away. It usually doesn't. It could be 2 or 3 months down the road. But combined with some of these other factors that I've already mentioned, I think there's going to be upward pressure on the price of physical gold. Now, there's a couple new factors that have emerged in the last week. The first thing is the price of gold hit a record high in Saudi Arabia, and their currency is the rial, and it's at a record high now. Now, some of you might say, well, that's maybe the rial is depreciated versus the dollar, and that's what it is. Well, no, it's not that. It's demand for gold. People over in Saudi Arabia, and investment entities, the public, they're converting their rial into gold. And the reason why I know it's not a currency situation, other than maybe losing confidence in the rial, is that from roughly late last September through just call this April, the rial actually appreciated versus the dollar, and then it's basically gone sideways since April. So it's the price of gold, price in rials hasn't hit a record there because the rial is depreciating against the dollar. Hit a record there because people over there would prefer to own gold than their own currency. Another interesting aspect that emerged last week is that, it was in a Reuters article. The Reuters does a pretty good job covering the global gold market, and the premiums that the Japanese are paying for gold in Japan hit an all-time high. And so there's not import quotas on gold going into Japan, so that doesn't explain it. The premiums have hit an all-time high because obviously demand is exceeding the supply over there. And people are willing to pay more than the spot price of gold, priced in yen, and that means that dealers can charge more. And what that means is that there's going to be more physical gold flowing into Japan, another source of soaking up the global supply of gold, and that will push the price higher. Another factor that a lot of you probably are familiar with is the sentiment. I mean, the sentiment is down in the Mariana Trench with whale shit. It's really poor. Someone circulated a picture of of the lobby area at the Denver Gold Forum going on this week in Colorado Springs, and it looked like a morgue. And I chatted with someone who was there, and he said it's very quiet. And we've seen this in the past. There have been times when then these conferences, when the price of gold has been, relentlessly capped or pushed lower for extended periods of time, like we were experiencing now. And all of a sudden, interest at a lot of these conferences dries up. And I mean, it's funny how sentiment works as a contrarian indicator, but more often than not, it usually means that the sector is bottoming and getting ready for a big move. One last thing I just wanted to talk about, and I think I mentioned last time that I am very excited by the trading action in gold. And I'm sorry, I didn't do a good job labeling this chart, but this is a 1-year daily chart of the price of gold. And you can see here that, and this same thing applies to silver in terms of the trading action. You can see here that the price of gold hasn't been below 1900 since like early March, earlier this year. And it moved up over 2000 and came back down, profit taking, price management from the banks, the usual suspects, profit taking by the hedge funds, CTAs. But since the end of June, there's been a few attempts to try and get gold down to 1900. They can't even get gold down to 1900 now. And every time it's kind of sold off and bounced off this little trend line, it just keeps bouncing off of it. And late last week, gold that was pushed down to the 200-day moving average. It gapped below it really briefly on Thursday, and then popped back above it and closed well above it on Friday. And it looks like it's starting to move a little higher here. It's hard to see, but it closed right on the 50-day moving average. And I think if it pushes above that this week, we're going to see another run to 2000. Silver, just off the top of my head, the chart looks similar, only with more volatility in it. This kind of lower band can be defined around 2250, but every time it's been pushed below 23, it doesn't stay there very long, like sometimes less than 24 hours, like last week on Thursday, and it bounced right back above 23, and it's closed above 23 today. So in summary, those are the factors that, sorry, there's a fly buzzing around my office. Those are the factors that I think that have a really good shot at pushing the price of gold higher in the coming months. And again, I don't put timeframes on this, and people who demand timeframes from analysts, well, put your own damn timeframes on it. I'm giving you the information that I have and what I think is going to happen. Sometimes I'm right, sometimes I'm wrong, but we have seasonality in our favor. We've got global supply and demand in our favor, and we've got a U.S. government that is about ready to start issuing debt at a parabolic rate, and those will all converge and act as a very powerful upward force on the price of gold and silver. So with that, I'd just like to mention that the next new issue of my Mining Stock Journal will be released this afternoon. My good friend and colleague Trevor Hall turned me on to an idea of a stock that's gotten the crap beaten out of it. And it's a junior early stage explorer. And I think I'm not talking to the management until tomorrow. I'm recording this on Tuesday evening. But I am having a conversation with the CEO on Wednesday. And just from looking at all its information, going through all the historical news releases, how this company has evolved, I think this thing has the potential to be a 5 to 10 bagger, on the assumption that we get a nice big bull move in gold and silver. So if you're interested in learning more about that, you can find a link to my mining stock journal with more information on it at investmentresearchdynamics.com. And until next time, as I always like to say, please enjoy what you can, as much as you can, while you still can, because I think things are going to start getting really ugly in this country over the next few months. See you in 2 weeks.